We've heard from Pimco, the big West Coast investor, that the best of the bond market is behind us. But what about inflation? We keep hearing so much about inflation. Pimco had a few words for us on tips. Michael McKee is here with me.
They've got a tip. Don't buy tips. The world's biggest bond fund now saying that deflation is a major concern. It's something we've been talking about here on Bloomberg TV for quite some time. After recessions, companies always have trouble raising prices, but this recession was so long and so deep, price pressures are unusually tame. Pimco now thinks that as central banks get out of the extraordinary stimulus, such as the Fed's mortgage buying, that we could see prices go even lower.
So if tips aren't the place to go, if Treasuries aren't necessarily the place to go, where do you go? What does Pimco say?
Well, they're underweighting inflation-protected securities at this point, even though they own more of them than anybody else. Last year, tips outperformed, gaining 10% versus Treasuries' loss of 3.7%. So far this year, it's reversed, Treasuries beating tips.
Tips, though, were a very, very popular call. What are we looking forward to here?
Well, a lot of people are jumping on this deflation bandwagon. BlackRock, Goldman Sachs see no inflation in the pipeline. Even the Fed's projections show inflation falling, the core inflation falling into next year.
All right, Michael McKee with Pimco's tip on tips.